call it a comeback. Just 6 months ago, your company was on the verge of bankruptcy, and now riding this new wave of investor enthusiasm. And you're taking advantage of it, right, with a number of stock sales. You've raised nearly $100 million so far through stock sales this year. Would you say that this new investor has really been a lifeline for your company?
It's changed the game. As early as October 30th, we had an equity market cap at Ashford Trust of about $15 million. And to now have an equity market cap of over $1 billion, and largely due to the participation of these retail shareholders, it's a game changer for us. And it gives us the opportunity to maybe do things at a pace that we never anticipated doing. And we're profoundly grateful for it, because it's not what we expected to be at this point in this recovery.
What exactly do you plan to do with this new investor enthusiasm? I mean, you've raised a lot of money. Do you plan to use some of that to bring down your extremely high debt levels, nearly $4 billion? Do you think these new investors, really understand the risk associated with your stock?
You know, they're more sophisticated than people give them credit for. So I do think they understand it. And it's something where it's unlikely that I can solve all of our problems in a short period of time. It's something that's going to take time. But again, given what we're seeing and the enthusiasm in this group, it gives us opportunities that we haven't had before.
Some investors have taken issue with the structure of your company, external advisor and a real estate investment trust, your former CEO, Monty Bennett. What about your employees, though? 7,000 employees before COVID hit. You had to lay off nearly 95% of them. Do you plan to bring any of those back?
We're trying to bring them back as fast as we possibly can. And we actually have hundreds of spots that are open at hotels across the country. And so we are excited as travel is coming back. This recovery is real, and it's accelerating. And we need to get people back into the hotels, both customers and our employees. So we're doing that as fast as we can.
Faber back here at the NYC. You know, to what do you attribute that investor enthusiasm? Can you cite a triggering moment? Was it simply a large short position in the stock, or perhaps something else that you're aware of that we're not, that lit the match, so to speak?
Yeah, David, that's a magic question. I don't know. I mean, in some ways, it seems like they choose you. You don't choose them. I think we had some trades in the fall when we were doing a preferred exchange that created a little bit of volume, but it was something that we saw some investors on Twitter, and this really wasn't as much even the Reddit community. It was on Twitter, and the guys like Zach Morris and Will Mead and others, who were guys I didn't know and hadn't heard of, that saw something in our stock, saw something in our name months ago, and slowly built up this community that I didn't really know existed. And then once you see it as a CEO in this modern era of communication, you either choose to embrace it and use it for the sake of the company and the shareholders and our employees, or you become a silent CEO. And I chose to lean into it a little bit, and we'll see what happens.
Yeah, we're seeing a lot of leaning in. I have to say, Rob, it's Morgan. The fact that you just joined Twitter in the last 24 hours as well, the fact that you are looking to directly talk with this individual investor base that is gaining steam right now. Are you yourself, as a CEO, adopting a new playbook? What do those discussions look like with your board, with your C-suite, et cetera?
It's a good question. And yeah, it is completely different. I was talking with one of our investor relations people, and how years ago, 5 years ago, 10 years ago, we used to be a 80-90% institutional shareholder base. And now that's completely flipped. We are probably an 80 or 90% retail shareholder base. And that changes the way you approach things. And the reality is that we've got to be able to engage with those shareholders and both listen to them, know that we appreciate them. And so, yeah, this would not be my preferred path. I'm not a big Twitter guy. I've not been out there for a long time, but given where we are now and what the future of this retail game looks like, I've got to do it. And I think it's what's in the best interest of our shareholders.
Yeah, so you just released some documents as well in those last 24 hours on Twitter. In terms of your forecast and the path to full recovery, lay that out for us.
Sure. I think you're going to see great numbers this summer. Leisure travel is back. Fortunately, we have a portfolio of 100 hotels, mostly Marriott and Hilton and Hyatt branded properties across the country, and very leisure and transient focus. So I think the summer is going to be very strong. The real question is what happens after Labor Day. Do business travelers come back, and when do groups come back? and it's hard to say. But I think conservatively, I think looking at 2023 as probably when the recovery is back to 2019 levels, and God willing, it could be sooner than that.
Shepard Smith here. Thanks for watching CNBC on YouTube.